Every trader, whether in Forex, stocks, or crypto, enters the market with a plan, but only a few stick to it when real money is on the line. Why? Because expectations distort perception. When you expect to win every trade, a single loss feels like failure. But when you expect losses as part of the process, each one becomes data. This shift in mindset is what separates amateurs from professionals. The reality is simple: consistent profitability takes time. The first months, or even years, are less about making money and more about learning how not to lose it. The best traders in the world spend years refining systems, testing strategies, and learning to manage their emotions. There's no shortcut for screen time. No substitute for discipline. They know that even a 50% win rate can make them wealthy if they control losses and let winners run. What you rarely hear about are the silent years, the ones where traders lose small amounts, learn, adjust, and build resilience. It's not glamorous, but it's where every real trader is forged. They learn that success doesn't come from predicting direction but from managing reaction. The moment you stop needing to be right on every trade is the moment you start becoming consistent. Another expectation killer is the myth of constant income. Trading isn't a salary. It's variable performance. Some months will be great, others painfully quiet. If you expect a paycheck from the market, you'll force trades that don't exist. The market doesn't care about your rent, your goals, or your schedule. It rewards discipline, not desperation. And let's be honest, social media fuels delusion. You see screenshots of $10, zero profits, but not the $9,000 losses that came before. You see highlight reels, not reality. Real traders rarely show off. They're too busy working on consistency. The market humbles anyone who tries to impress it. Managing expectations also means understanding compounding. Most traders underestimate how small gains add up. A consistent 3 to 5% return per month might not sound thrilling, but compounded over years, it's life-changing. The traders who survive think in years, not days. They understand that longevity, not excitement, builds wealth. Another critical mindset shift is accepting boredom. Real trading isn't fireworks. It's repetition. You'll execute the same strategy hundreds of times. You'll sit through hours of analysis without placing a single order. The thrill seekers burn out. The patient ones endure. The boring path is the profitable one. You also need to develop emotional neutrality. Wins should not inflate your ego, and losses should not crush your confidence. Both are just outcomes of probability. The goal isn't to eliminate emotion. That's impossible, but to prevent it from dictating your behavior. Professionals feel everything, but react to nothing. Risk management ties it all together. If you risk too much, no strategy will save you. If you risk too little, you'll never grow. The sweet spot lies in risking small enough to survive losses but large enough to make progress. That balance comes with time and testing, not guessing. And remember, consistency beats intensity. It's better to trade one well-defined system for a decade than to hop between 10 strategies every month. Every time you reset, you delay mastery. Stick to one process long enough to understand its rhythm. Real edge comes from experience, not constant change. In the end, realistic expectations protect you from yourself. The market doesn't destroy traders, ego does. Expect losses, learn from them, and focus on execution, not emotion. Trading success is never instant, but it's always earned. When you stop asking, "How fast can I win?" and start asking, "How long can I stay in the game?" that's when the market starts to reward you.